I want to focus on delivery first because that's more discretionary. And obviously, times are tough right now. People are being more picky about what they spend on. Are you expecting any pullback in delivery in particular? Why or why not?
Well, first of all, thank you for having me. It's great to be here. And obviously, it's great to be here within the context of super strong results overall for Uber. As it relates to our delivery growth, we saw really solid growth this last quarter in terms of constant currency, growing about 12%, our gross bookings on a year-on-year basis. And we're seeing the habit of frequency, for example, frequency for delivery consumers was up on a year-on-year basis. Basket size continues to be higher. And we actually saw our gross bookings growth accelerate from Jan to Feb to March. So we expect Q2 delivery growth to be higher than what it was in Q1. So we're not seeing any kind of a signal at this point of a slowdown. And while there may be a slowdown going on in terms of the economy, I think generally the consumer remains strong. Generally, consumers spending more money on experiences, and I think food is a part of that experience set. And we as a company, because of our global scale and size and our brand and our tech prowess, so to speak, are generally going faster than the delivery category. I think if you put that all together, along with profitable growth, you get to good outcomes regardless of the environment.
All right. Lyft has a new CEO. They've made it clear they're going to lean into lower prices to compete. They want to claw back market share. What's the risk of a price war?
Well, you never know, and you can't predict the future. But from what we have seen in terms of the statements coming out from Lyft is that they want to compete based on competitive pricing. And what we're seeing in the marketplace, you mentioned at the beginning, which is Uber pricing is quite competitive in the marketplace. And I think if you have Uber and Lyft competing not on who can have the lowest price, but who's got the best experience, who's got the best brand, who's got the better reliability or breadth of products out there, I think that, we can both do fine in this marketplace. The fact is that the mobility marketplace is growing. People are going out more. They're going to restaurants. They're returning to work. They're returning to the office. We are definitely seeing those tailwinds. And I wouldn't be surprised if Lyft does too going forward.
Welcome to our Bloomberg radio and television audiences worldwide. We're with the CEO of Uber, Dara Khosrowshahi. Dara, on that outlook on consumer strength, how long does it last? I mean, are you seeing any price pressure on the consumer or any sort of granular data you can give about how you see the rest of the year?
We're not seeing any kind of pressure as it relates to consumer spend at this point. And I think part of it is because of our supply situation and generally supply in the marketplace getting better. We are seeing drivers talk about inflation more. And about 70% of drivers who are coming onto the platform have said that inflation, the affordability of groceries, et cetera, has played a part in their decision to come onto the platform and to join Uber in order to augment their earnings or just bring in, a healthy earning set as it relates to the marketplace right now. We are seeing some signs on the enterprise side of weakness in terms of pickup, for example, of Uber for Business. So when we look at Uber for Business, new client signings, they're a bit slower than what they were pacing before. So I think you're seeing in the environment, companies are being more careful. They are cutting costs. Often they're kind of cutting personnel. But that weakness has definitely not translated into the consumer. And the consumer we see being very strong, and we don't see any signal of weakness there at all.
The other enterprise-facing business is freight, which you fund separately. But what metrics would guide a timeline to sell or spin off Uber Freight, Dara?
Well, at this point, the focus for freight is to really operate the business in an optimal way. Right now, the freight brokerage business and the transportation business is readjusting pricing significantly. Prices were sky high 2 years ago. They have come down significantly for 2 years now. And I think what we're going to see is essentially pricing bottoming out sometime in the next couple of months. As we see that pricing bottoming out, then we can get in a position to grow our freight business, use our digital acumen and the data advantage that we have in order to provide a better service for shippers and to be the best platform for truckers out there. That's really the focus of freight right now. Ultimately, we will look to optimize whether freight's inside of Uber or outside of Uber, et cetera, to maximize shareholder value. That's what we're here for. But today, the focus is on building the best digital freight business that we can.
Tens of thousands of folks have been laid off across the tech industry, Dara. You've continued to say no company-wide layoffs, but you have done some more targeted layoffs. You've done some performance-related cuts. How are you thinking about headcount right now? And are you considering potentially a broader RIF if things continue to get worse, looking across the broader landscape?
Well, I just don't think that companies should all of a sudden get disciplined about headcount because they have to. I think that you've got to have discipline on headcount and cost as a continuing way that you operate going forward, daily, weekly, monthly, yearly. And you've seen that discipline for us. So if you look at our headcount growth from, call it 2019 to where we are now, for the base business, for our mobility and delivery business, total headcount growth over that period is up about 10% versus bookings growth that is approaching 70%. So we have always been very disciplined in terms of how we manage costs. We talked about this year, even though we're showing huge top line growth and huge profitability growth, we're not letting go of that discipline, and we're saying that headcount's going to be flat to down. And I think that kind of discipline and the rhythm allows the company to focus on executing, on innovating, and not looking around, over your shoulder as to whether you're going to be one of those people who's fired or not. So right now, the business is executing well. If we keep executing well, we're not going to have a RIF. If we don't, then we're going to adjust. And we've always adjusted at Uber in a very timely way.
All right, you're listening to Uber CEO Dara Khosrowshahi. You've seen so many economic cycles, Dara. You ran a travel company through 9/11, through the financial crisis. But look, we just saw First Republic sell in a fire sale to JP Morgan. How are you thinking about what's ahead? What's your outlook? And how long does this last?
Yeah, I could not tell you how long this lasts. But I think as a company, you've got to be prepared. I do think that the cost of capital for the banking system, that tends to be higher leverage, but for the startup ecosystem is getting much more dear. I don't think we are close to the end of that road. I think that rates are going to stay higher for longer because despite people predicting recession, it's not there yet. So I think that companies across the board, whether you're a bank or you're a technology company, you've got to be super conservative as it relates to your balance sheet. You've got to be incredibly disciplined in terms of capital allocation. And I think that environment is going to help the larger global players who are more diversified. And we are exactly that. And that's why we're showing higher than category growth and much stronger than category margin expansion, and now significant free cash flows as well. We think that's a great combination, and we're prepared to deliver on that promise, whether the environment's strong, medium, or weak.
Dara, I went through the earnings transcript with a fine-tooth comb. No mention in the prepared remarks, but the first question was about AI. Are you going to accelerate your investments in AI, and are you an AI company?
We have been in AI since I've been here at the company. You think about our pricing algorithms, routing algorithms, when we decide to, let's say, batch a delivery order or not. Even technologies such as recognition of your license or your insurance card, et cetera. All of these are AI driven, and they have been a part of how we operate as a company. What we are seeing now is that as these models get more capable and larger, you can train them over much larger data sets. So we would have, let's say, an AI algorithm that is pricing for city by city by city. Now our AI algorithms can price globally, and the efficacy in terms of pricing and matching is incredibly powerful. And because we have more data than anyone else across a multitude of businesses, we think AI is going to be a very, very powerful tailwind for us.
Dara, quick yes or no. Are you a ChatGPT user?
I am a ChatGPT user. I'm trying to get better at it.
Right.
My skills as a prompt engineer are not what I want them to be.